So the last type of adjusting entry is going to be for accrued revenues. So these are revenues that we have earned, but we have yet to be paid for. And so these are going to affect the revenue and the asset account. So think about your accounts receivable. That affects your revenue and your asset account. So down here, it says, here's the example. If we want to make an adjusting entry to increase interest revenue and increased interest receivable for $40, we would determine whether we need to debit or credit the following accounts. So we know it's interest revenue and interest receivable. We know we want to increase the revenue and increase the receivable. So we want to increase both of those. There's the revenue and the receivable. The receivable is an asset account. And so how do we do that? In order to increase the revenue account, we need to credit that account. And if we want to increase the asset, we need to debit that account because a revenue has a natural credit balance and a asset has a natural debit balance. And so that's what our journal entry is going to look like. It's going to be debit the asset account of interest receivable for $40 and then credit the revenue account of interest revenue for $40. So down here, once again, we're going to go to QuickBooks, and normally we would save and close, but in this case, we're going to cancel. So we're not going to save this journal entry, but we're just going to go through the process just so we are familiar with it. So once again, we're going to go plus create to other, and then journal entry. This is going to be done at the end of the accounting period. This is going to be ADJ4, which is just the control number, so our fourth adjustment. On line 1, which account do we want to debit? So in this case, we're actually going to be adding 2 new accounts. So select add new, account name, interest receivable, account number 1110. Account type is going to be other current assets, and then the detail type is just going to be other current asset. Save that. So we're going to debit this account for 40, and then our description to accrue to record accrued. There we go. And then our account that we're going to credit, we're also going to add new. This is going to be interest revenue, account number 4600. This is going to be other income, and then interest earned. So we're going to save that. So now we're crediting this account for $40 because it wants to balance the entry. And then our description carries down. Memo, adjusting, entry to record, accrued, interest revenue. And then if we add any attachments, we can attach those there. And then we would just save and new, save and close. So that there is going to be how we record our accrued revenue entry. So we're not going to record this one. We're going to cancel, yes, and that is that.